Hello, everybody. I'm Toby Gennaro, and we've got a strong-looking crowd on this morning. So let's do a sound check real quick, as we normally do. Make sure you guys can see the current splash screen. It says August Forex Focus for today, August 14th. We'll be talking about some Forex stuff, some charts, and looking at trading the Nadex spread. So if you guys can hear me loud and clear, and you can see the current splash screen, just let me know via the question box on your screen. Kind of shoot me over an electronic high five, and once we get that all working, we'll jump into the content here and get to the charts as quickly as we can. I got about 30 minutes this morning to work with you, and so we'll show you a trade strategy and some of the spreads and talk through all of that. Is everything loud and clear? Can you guys? Can somebody shoot me? There you go. Thanks a lot. Appreciate it. All right, so let me just do an introduction for the recording here when you guys get this, and then we'll move into the content. Hello, everybody, and welcome. I'm Toby Gennaro, and I will be your presenter for today. The topic for today is going to be on foreign currency. So I'm going to be talking through a series of specific trade setups that are happening in real time on the charts, and I'll show you what I'm seeing in the markets. Then we'll take a look at how to trade these technical setups with Nadex spreads. So for those of you that are on the live webinar this morning, if you have any questions during the session, you can type those into the question box on your screen. I may be asking you some questions as well, so we'll try to keep this interactive. That's really kind of the point of these Tuesday sessions. And just by way of formality, I need to put up this risk warning and disclaimer, as we normally do as part of the business. I'll leave this up for about 30 seconds or so. If you guys could just have a quick read through this, that would be good. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that one? All right, moving right along. Need to put up one more disclaimer here directly from Nadex. You can have a quick read through this one. It's a short one, and that'll wrap up the disclaimers, and we'll get to the content here as quickly as we can. All right, very good. So let's moving right along. So just talking about the agenda for today and what we're going to cover here in the next 30 minutes. This webinar provides, really just a basic introduction to Nadex spreads, and we'll discuss the mechanics for trading these contracts using the Nadex platform on the Forex markets, which is the charts that we'll look at this morning. New traders to Nadex products, or those who with some previous experience, will find I think this interactive webinar to be just a great way to learn more about some of the Nadex contracts, today specifically about spreads, and I think it'll also give you the opportunity to ask some questions maybe about some things you don't understand, or things that, questions that just pop up in your mind as I move through the content. So for today, we'll be looking at live trades, setting up and then applying the spread characteristics to those trades. I'll talk about a variety of ways to utilize these spread contracts, and I'll introduce the risk and reward components as well as we move through some of the charts. So before we get started on the live charts here and finding some of those trade setups, just allow me to provide you just a quick introduction to Nadex spreads, and we'll kind of get everybody on the same page before I dive into the charts. So let's just cover a few key points right here related to those spreads. Spreads are a fairly simple derivative, right? They have a built-in floor and a ceiling price that corresponds to the underlying asset price, which is what you'll be most familiar with. It really makes them easy to understand, very different than the way binaries are priced from 0 to 100. So it's basically a prepackaged vertical spread is what it is, and you can trade them long or short. The spread range of this contract defines the high and the low price points at which the contract may settle relative to the underlying market price. And this then creates a potential tunnel of profitability between that high and that low range. So if the underlying market price goes above the high or below the low, there's no advantage to you continuing to hold that spread contract, because the price is not going to move. It's already reached the ultimate high or the ultimate low, and that's the extension or the range of profitability, okay? So like binaries, you always know your maximum potential loss and profit on each trade prior to placing any of your capital at risk, so that remains the same. And like binaries as well, spreads are based on the underlying market, such as crude oil or natural gas or precious metals, even Forex that we're looking at today, as well as equity indices and things like that. Some of the benefits are a higher leveraged contract for hedging type purposes in order to offset maybe a futures position in an underlying asset. And the most obvious benefit is having a limited risk contract without the need for a stop loss. So these contracts are, again, they're settled in cash, so there's no margin to consider, and you can trade these contracts with a fairly small deposit amount. If you like to trade intraday, spreads are a great vehicle to do that, since they have multiple expiration times each day to look for various setups very similar to binaries. However, there are no weekly contracts on spreads as there are with binaries. So you can't trade multi-day positions. You can trade basically overnight with a 24-hour contract, but you can't trade multi-day positions. So if you're currently trading binaries, I think you'll find the spreads to be probably easier to understand in concept, since the contract pricing is correlated to the underlying asset price. And the spread contracts move very much like the underlying market that you're trading. They don't have the, a lot of the whipsaw, really fast movements of the binaries. Okay, so let's go ahead here, get to the charts. What I did was I took a look at a couple of charts previously before jumping on the webinar this morning that I thought would be good to consider for potential trading opportunities. So let's go ahead and take a look at those, and I'll walk you guys through, the strategy or the two strategies, depending upon what we can find in the charts. We're always at the mercy of the markets when when we're doing this. So let's go ahead and do that. Let me go ahead and get my charts here set up, if you give me a moment. And we're going to we got the Nadex spreads and we got the charts going. So let's go through a couple of things that I wanted to look at. Were it's always difficult, for a 30-minute session like today, is to go in and with the markets, gyrating and moving as they do, to find setups specifically in this 30-minute time frame. That's always a challenge. And then to look for the actual underlying contracts that fit those trade setups within that 30-minute time frame. So I'm doing my best here. Some days, some weeks it works out a little bit better than others. Sometimes, the charts just move after I find the setup. And so I'll just kind of talk you through nonetheless and at least point those things out to you. But I want you guys to at least understand the technical setup, the strategy that we're using to do that. And then we'll go to the Nadex platform and look at and evaluate some of the spreads to trade and kind of show you how those work and how they're priced. So let's take a look at the pound yen right here. And I like to look at these charts from the top down. So that means I'm going to start with, something around, the weekly or the daily. I mean, I think probably if you're, trading these on an intraday basis, the daily chart is probably good enough. But I'll just take you through what I normally do in looking at, kind of taking a step back, looking at the monthly chart here. We've had a long move up, and then, we're kind of pulling back down into a level of support right here. And then looking at the weekly chart, we've got the three moving averages, actually all four moving averages rolled over, the 200, the 50, the 20, and the 10, all fanning to the downside. We've got lower highs and we've got lower lows. So we're actually in a downtrend here as well on the weekly chart, as we are even on the monthly chart, with a lower high here and we've got lower lows consistently. So we have downtrends on both of the higher time frames. As we move over to the daily, you can see lower highs, lower lows. Here on the 480 chart, very nice, everything flowing pretty nicely. And then this is the setup right here that I'm looking for. I'm looking for the trend flow trade, which is on a downtrend, it would be a rally back up into the sell zone between that 10 and 20 period moving average. Then I'm looking for a rejection candle exactly like this one right here. And so what this does is it gives me an ultimate high of that candle, a close, and then an ultimate low of that candle right here. And I'm going to use the If I was trading the underlying market, I'd be using the high for my stop loss, and then I'd be using the ultimate low for my entry or my my sell stop going into this market and joining this trend to the short side. And so what I have to wait for is I have to wait for the next candle forming, and then I would get that trade set up. So in this case, when we're using binary contracts, we don't have, or I'm sorry, Nadex spreads, we don't have the, we're not using stop losses. So I need to wait for that next candle to form, to make sure that my trigger candle here is closed out. And then once it breaks the low of that, then I'm going to be looking for my trade setup. So we're a little bit late on this one. I would normally, since this is an 8-hour candle right here. I mean, this has broken, probably a number of hours ago. So I more than likely would have been into the trade several hours. If we go down to the next time frame, I'll want to find that same trade setup on two side-by-side time frames. So this is the 240 and the 480 would be my two. Got a nice big rejection candle there. And then we actually have a breakthrough the low of that candle, which means the next run to the downside is in the process of taking place. And so that's going to be my my technical trade setup. Currently, more than likely, I would have been looking at this trade setting up right around the break, which would have been right here at the bottom. If you can see that, it's right at the bottom of that large candle. And so that is like 141,400 is right around the area where more than likely that would have been an area what I would have been waiting for to join it. But right now we're down here 141,130. So let's just take it where it's at and look at some of the Nadex contracts for the pound yen. And I'll just go through some of these so you guys can see. The contracts have closed out for the 10 a.m. to the 12 noon. So let me see if we can 7-3. Let me just do a refresh here real quick and make sure we're working with all the right contracts. Okay, so we're going to do the Forex spreads, and then we're going to go to the pound yen. And so we're going to have then a refresh of all of these. So we'll have the 11 to 1 p.m., which gives us about a little less than 50 minutes, not a lot of time, since we're looking at some really high time frames there, the 8-hour and the 4-hour. So I'm not too keen on that, even though the market's already started its move. You'll notice that on these ones, there's a 100 point spread on these. 140 is the low, and 141.60 is going to be the high. So you're typically going to get 3 contracts of choice with a spread range of about 100 points. So you got 50 minutes left on that one. As the time goes out a little bit longer to like the 90-minute or the 2-hour time frame, these ones you've got the same. This is still a 100-point spread from 140.30 to 141.30. So more than likely this one could work for us. At least gives us almost 2 hours to work with. And then on this one, we've got almost 3 hours. And you can see this one is a 200-point spread from 139 to 141.80. So the spread ranges are different. Then when you go down to the daily, you get another choice. You get 4 choices total, and you end up with about almost like a 500-point spread. But since these are all within 24 hours, you still have about 3 hours left on that one. So it's really about all the different point spread ranges. And what that means to you, the shorter the spread range, like a 100-point spread, the price when the market does move, the underlying, the price on that is going to move faster than if you have, say, a daily with a 500-point spread. The price action is going to move, it's going to move probably a little bit slower for you. And that just has to do with some of the built-in time value and those kinds of things. So let's take a look at some of these that have a little shorter spread range, like the 200 spreads. Let me just pull up the chart again here to take a look. We've got 141.80, I think is probably going to be the closest one. So right now we're at 141.60, so that's actually pretty good. You want to find these spreads when they're really just dead on. the top of the range if you're going short, and you want to find them dead on the lower of the range if you're going long. And that gives you the full amplitude of the 200-point spread. And if you're correct on the trade, then you can pick up, almost the entire spread range, provided that you have enough time left on the contract to make that happen. So that one looks pretty good right there. 140, 180, we've got almost 3 hours on that one. We can pick these up going short for about 141.17, which gives us at least a minimum of a 1-to-1 reward to risk. The 139.30 is a little bit to the low side. Don't know if we're going to get to that point, because by the time we hit this level right here, that's going to retest the low, probably bounce off of that level, quite possibly. Folks will be covering at that point. So at 140.250, that still gives us enough for at least a 1-to-1 reward to risk, and probably even a little bit better than that, with a decent chunk of time to work with. If we go up to the next one with a 100-point spread, these are going to move a little bit quicker for us. Got about 2 hours left on that one, 141.30. So that one's even a little bit better, because it puts us basically in the money on these. So as soon as the market, if it turns around and continues to the downside, we're going to pick up movement on that contract pretty quickly. So you got a couple of contracts there that you could look at. In other words, for trading this market short, going back into a retest of this level down here at 140.269, and those would be some of the things that I'm looking for. A number of things that I'd look to do as well, since we're trading intraday with these contracts. These are some pretty high time frames. I'm trying to get the higher time frame trend working. And so what I can do then is go down to the lower time frames and then look for another trade setup on the lower time frames that correlate to some of those higher time frame charts. So I want to kind of use those higher time frame charts as my anchor. Right here, if you look at this 30-minute chart, it looks like we're going to get a bounce here, potentially back up into that sell zone again. And if I go down even further to like the 15 and the 5, I can come down here knowing that I have a good setup on the higher time frame charts, and then just look for that same setup on these lower time frames. I've got the 50, the 20, and the 10 in alignment. I've got some good setups in the past that have happened. I've got a good downtrend of lower highs, lower lows. Nice rejection candle there that took off. Now we had, a lot of overextension from the moving averages, and it looks like, we had some people covering their shorts, and that's what drives the market price back up into that sell zone between that 20 and 10 period moving average. So we might even be able to look for a more cleaner entry by waiting for a move back up into the sell zone on these shorter time frames, maybe the 15 and the 5, and then waiting for a sell candle to give us that next turnaround point, as opposed to looking for these trades kind of in the middle of a 4-hour or an 8-hour candle. We don't really have a whole lot to go by, since the trade has already broken the low and I've already missed the setup. Does that make sense to you guys? So in other words, identifying that on the high time frame, using that as an anchor chart, I know what the direction of the trend is. There is a higher time frame setup that could potentially last for the next 8 to 16 hours. But let me go down here, trade with that higher time frame trend going short, and then look for these setups maybe on the 5 and the 15, the 15 and the 30, the 30 and the 60-minute chart, and then look for those setups in that regard. So that's kind of a quick concept there of looking at things technically. Let's take a look at the euro yen here. I've got just a few minutes left. And so this one on the higher time frames, the monthly and the weekly, we still have, lower high, lower low on the monthly. We've got lower high, lower low, and then another retest of that lower low right around that 125 level. Potentially maybe looking to break down below that low and set up a potential flat level right there. Let's go down to the daily chart. Daily chart, as you can see, we had a little rally back up into that sell zone amongst the 20 and the 10. Nice rejection candle there, break of the low. Higher time frame trend here is going lower. So we have that looking pretty good. Then on the let's see, actually that was the 8-hour chart. Sorry, not the daily. This was the 8-hour. And then on the 240, the 4-hour, beautiful couple of rejection candles right there, a breakdown through the low. So almost an identical setup to the pound, setting up here on the euro yen, and then even another setup here with a nice rejection bearish candle there, and a further breakdown. So a setup really almost across 3 time frames, which is very, very good. That's the setup that I like to see. And then if we go down, like I said before, and start to look for potentially a cleaner entry on a lower time frame, we can start to look here. We got some rejection candles. We might be looking for a bounce back up into this sell zone, and then looking for another one of these rejection candles in that sell zone is probably what I'd be waiting for on this one. Here we have a consolidation on the 5-minute chart. We have a nice flat level here with 1, 2, 3 touches. So what happens is we might be getting a rejection candle in the sell zone here. And if we get another retest down here at this level, we might be looking for a breakdown below this flat level at 125.8, and then looking for a move lower. But for right now, if I can get this candle closing out somewhere looking like that, I'd be very safe to assume that we've got a bearish candle in the sell zone here, got a sell candle in the 15-minute, and then I'd be looking right around that 125.900 level for our spread going short. So let's take a look at the euro yen, and then we've got so now we can look at some contracts, like even a 40-minute contract like we have here, 126.30. We're looking at 125.8. So we don't really, it's already down toward the low because it's only a 100-point spread, so that really doesn't work for us. Let's look at the next one. We got about an hour and a half. That's a lot of time, but see, it gets us a little bit better on the spread highs and lows, the range. So 125.90 is going to be very close to what we want, right around 125.800. See, 125.9 is very, very close. That's almost a perfect alignment with the chart timing, and then with the with at least the 100-point spread, and we're coming in shorting right at the top of that level. And so that would be one I'd be interested. We can pick that one up short around 125.85. Easily gets us into a 1-to-1 reward to risk, meaning we're risking 126 to make potentially the same amount if we can get down to 124.90, which seems reasonable in an hour and a half time frame. And then looking at one other one here, this one's got almost 3 hours left on it. 126.60, it's a 200-point spread, already in the money, same price as the one before. That one's actually doable as well. Doesn't really give us any more downside than the previous one. We'd actually have to go to a daily chart to actually get more downside to the 123.80. And then if we looked at the chart, the low here would be 125.80, and then if that's a flat level, we could almost look to get a breakdown below 125, say 126 to 125, another 300 pips below. So that would take us, almost maybe down to 125, 400, something like that, something down around here if we actually get a break of that flat level. So those are a couple different options on the Nadex spreads that you can use, and that's basically kind of how we do that. So if you want to learn, I haven't talked through everything here. Some of the things I'd like to talk to you about are the break-even way to manage a trade, but we're going to be going over that stuff in an advanced strategy course that you guys are all welcome to attend. It'll help you learn these strategies that we've kind of looked at briefly, but you really want to understand these strategies in a lot more detail. And so in order to do that, you can attend this premium trading strategy course where we'll teach you 2 trade strategies, the one that we just talked about, and then also the trend flow strategy, as well as the the momentum breakout strategy, which is a flat level breakout, which I pointed to on a couple of those trade setups. So let me do this as we wrap up the half an hour this morning. Let me just wrap up here with the advanced strategy course, give you a quick overview of what that's all about. It doesn't cost you guys anything. It's all compliments of Nadex, and you can take a look at whether you want to join in on that or not. It runs for about 3 weeks, and I'll just tell you a little bit about some of the details of how that works right here before we conclude. So again, this is a 3-part series. This course is available to you all at no cost, completely sponsored by Nadex. All you need is a funded account with Nadex, and you're good to go, and you can take advantage of learning some more about trading strategy and technical analysis. So what we'll do here is we'll go through a deep dive into the technicals. We'll look at the most reliable tools to get you set up for the trade strategies that we'll teach you in this 3-part series. We'll spend a lot more time going through all the different scenarios of the technical ingredients. We'll take trend analysis to a whole nother level, continue to define that price action analysis that we're looking for. So this session really going to help you to focus on what's really important in trading and help you to use strategies to their full potential. We'll be focused on understanding the 2 trade strategies themselves, looking at live screenshots and trade setups. We'll spend more time on the indicators, both convergence and divergence of a trend, and then explain how to use multiple time frames when looking for trade setups. So all of these items, along with candle patterns, reversal structures, to help you guys identify strong trends and then avoid those trends that are about ready to reverse. Again, the 2 trade strategies you'll be learning here, the trend flow trade and the momentum breakout strategies. You've seen an overview of probably each of these in some previous webinars. We just took a look at both of these at a high level this morning. Now we'll talk through some trading psychology as well, and we'll talk about risk and money management. We'll talk about that trading to the break-even principle. All of these are absolute necessities in managing trades and making sure you're entering the trade at the appropriate point and then looking for your exit points, all based on the price action, not based on any type of guesswork of any kind. So again, there's no cost to it, all completely sponsored by Nadex, and you'll be receiving an email to this effect, and you can jump in on this if you so desire. So again, Nadex is making an investment in your success as an investor, and that's why they sponsor events like these today. So a couple different ways for you guys to get in touch with us. Phone and email listed here for any questions that you might have, or you can ask me your questions right now. Just use the question box on your screen as you've been doing. Demo accounts also available to provide you some familiarity with the contracts and what we've been talking about today. For current members of Nadex, if you'd like to begin trading again, make sure you log in to nadex.com, take advantage of the advanced education webinar that we just talked about. I think it'll help you really take your trading to the next level. If you're new to Nadex and you'd like to set up an account, just go to, again, nadex.com, click on, I believe it's the orange box in the top right, it says sign up, and fill in your details there. Someone from Nadex will respond via email to get you started. So before you do sign off, there is a short survey upon your exit. Please let us know your thoughts there. And again, I'd like to thank you all for joining us on this Tuesday morning. And this will conclude the webinar for today, unless you folks have some questions, and I'll hang on for just a few minutes longer to get those answered for you.